that is analysis of profit and loss account, balance sheet, and your cash flow statement, right? It's going to be very easy. Like any person who understands these basic terms like capital, profits, and all would be able to do that. Okay. But before we move ahead, let us understand a business cycle. What is it? How a business generates money and how it put backs the money in the hands of providers of capital. So first of all, whenever I want to start any business, I need some money that is called as capital. Either I can put in my own money known as equity, or I can borrow it from someone else also known as debt, right? Fairly easy. I need money, I can raise it from someone else or I can put in my own money. Once I have some money with me, I want to start a business. Suppose I want to manufacture something, I'll need some machinery, some place where I'll be putting that machinery, so land, building machinery. These are called as your fixed assets. That is the instruments that will be used to produce your final goods that you will be selling in market. So these fixed assets will be used to make your final sales. And once you are able to sell some goods, you will be generating profits, right? This is the entire business cycle. Once you have some profits, you can either distribute them to equity holders, also called as dividends, and you will be paying interest of debt providers, right? This is the way. And if something extra is left, called as surplus, this will be invested in the business. Then that profit will again be used to purchase new fixed assets, then to do more sales, then some more profits will be generated, and this is how business keeps on rotating the money, right? And like understand, business is like a machinery that, like, it's like a complicated machinery. If you give it some input, it will be able to generate some profits for you, and you can use those profits as an inputs. So it is kind of endless loop, right? But you have to make sure that your machinery is lubed properly, it's not suffering. So that is working capital. Suppose you want to purchase some raw material to manufacture your finished goods, but you don't have money for it right now. But if you don't purchase, what will you sell? Your business will stop doing its activities. So you can get it on credit. That is your working capital. If someone wants material from you, your finished goods from you, and he's not able to pay you right now, maybe he'll be able to pay you in 1 month, then still, if you want to generate profits, then you can give that person something on credit. That is called as your working capital, debtors, right? So working capital is kind of a loop to your machinery known as business. It's very simple, right? Now I'll select it, and then I'll press Control C. The entire profit and loss account is copied, right? I'll just go to MS Excel and will paste it. Simply Control C, Control V. Going back again to Google Chrome. Here, just below their profit and loss account, you have your balance sheet. This profit and loss account is from 2010 till now. This balance sheet is also from last 10 years. So in this balance sheet, I'll be just clicking on this sign. It will expand other liabilities, and on this sign, it will expand other assets, right? Once you click on those, you can create a copy of this also. So select the entire thing till here, till total assets, Control C, and then Control V. Simple, right? Copying balance sheet and profit and loss account from your website. Okay, going back to screener, simply we'll be selecting this cash flow statement that is just below balance sheet, copy it and paste it here. Paste it here, right? Simple, very simple activities till now. Okay. Once I have this data, see, it's very difficult to process that. So I'll be just putting it in a proper format. You can follow up with me. So what I'll do is, I'll just delete this figures in crores. I know these figures are in crores. I'll expand this A column, right? Then I'll be deleting this figures in crores, and I'll be deleting this figures in crores. Okay. This is my input data. I have not started to analyze here. But one thing that I see always while I am analyzing any company, and this is the single most important parameter, that is consistency. Consistency of profits, consistency of sales, consistency of depreciation, consistency of your asset growth. I want the company in which I am investing to be very consistent. I don't want exceptionally sharp rise in profits and next quarter or next year exceptionally sharp decline in profits. That's not in my investment category, and retail investors are not able to time the markets. So you should also not try to do that. Okay. The only thing that I'll be focusing on is consistency. Let me increase the font size here. Okay. Right. This is my input sheet. Whatever data I need for analysis is ready here. Then I'll go to my output sheet. I'll be calculating only few ratios here, and will be trying to interpret this. Okay. So first of all, these ratios that I'm highlighting now are related to your profit and loss account. But before doing that, first of all, let us get our years ka data here. So I'll press equals to, and I'll just link these years so that it becomes relatively easy to understand about which year I'm talking about. So first of all, I want to see the sales of the company in an upward trend. Sales should always increase because we are in a country that is inflationary in nature. We are in a developing economy. Inflation is very high in our country, right? So even if they are not able to increase the volumes of their units sold, because of inflation, their sales are meant to be like higher, right? So I'll say I want to calculate growth. So in D column here, March 11, I'll say equals to last year ka this year ka sales divided by last year ka sales minus 1. Simple. This is simply telling me the sales have grown from 29 to 38. That is growth of almost 31%. I'll copy this and I'll paste it. Okay. Okay. I should have taken it till this. Okay. And I'll just convert them into percentages. Here. Okay. Now you can see it's very difficult to analyze it this way, but now it becomes very clear. The sales have been growing very rapidly, 30%, 29%. Then there was a fall in 2013. Then again it rose to 12%. Then there was a fall in 17. So I can clearly see, I think during this period they were struggling a lot. 13, 14, 15, 16, 17. Sale was like struggling, as in sale was not growing. It was only growing at the rate of inflation, 6, 5, 6, 7%. I'm not very happy about it. But look here, 95%, 63%. So it's a very, very good growing company, right? Though they are not that consistent, with the growth, but still they are going very rapidly. If some year they are not able to grow, then in a couple of years they are able to catch up. So I'm not very satisfied with the consistency, but I'm comfortable with till some extent. Okay. Then operating profit margins. These operating profit margin means how much profits you are able to generate before paying your interest and paying your taxation. This is basically your EBIT. Before paying your interest and taxation to government, how much profits the company are generating. So I'll say equals to, and I'll just link it here. This side I've already calculated operating profit margins for me. And I want profit margins to be increasing, right? I want my company ka profit to be growing. So I'll say Control C and Control V. Okay. And you can continuously see in this like 12% to 9, then 4, then 9, then 12. So after this bad phase was over, I think they have done pretty well. They are continuously able to maintain 18% or more profit margins. Since last 2 to 3 years, this company is doing really good. A good sales growth, almost double sales in 17-18, almost like 1.5 times or 50% growth in 19. And because of like COVID wala situation, I can give them this benefit of doubt that their sales have only grown by 8%. But that's not bad, right? Others were like many companies were closing. People were not able to perform at all. Even if they are going 8% in tough times, I'm comfortable with it. So gross profit margins was very hazy in last couple of years, but in last 2 to 3 years, I think they've been consistent around 20%. That's a good sign for me that this company is entering into a phase where it is becoming much more stable. Okay. Net profit margins. Net profits are what is finally left after paying interest, taxation, what is finally left with the company. So I'll say equals to Net profit margin is your net profit divided by sales. So net profit, this one, divided by sales. Enter. I want it in upward trend. Let me convert this into percentage. Okay. So copy, paste. Okay. And now this makes me really happy. It was constantly stuck between 2%, 3% till here. But once they are out of this bad phase, they are really able to increase their operating profit, and that is impacting their net profit margins. So in last 2 to 3 years, company have been really stable, and 13%, 15% net profit is healthy enough. Not too good, but not too bad also. Okay. This is analysis of your profit and loss account. I'm not making it very complicated. Obviously, lot more things could be done, but we learn them slowly and slowly. We are just starting. So this is good enough. Sales is growing, and my operating profits are growing, and my net profits are growing at a very consistent pace from last 2 to 3 years. This brings me some satisfaction that this company is improving with time. Okay. Then let's move towards balance sheet. These ratios are related to your balance sheet, right? First of all, fixed asset turnover ratio. Firstly, let us understand what does this ratio does. What does the ratio tell us? Fixed asset turnover ratio means for every 1 rupee invested in your fixed assets. Remember that business cycle? Like you raise some capital, you purchase fixed assets from that, and fixed assets were used to do your turnover. So fixed asset turnover ratio tells you how many times of sales you are able to generate by putting 1 rupee of capital in the business. So I'll say fixed asset turnover ratio is sales divided by your fixed assets. So sales divided by fixed assets, that is given over here. Okay. Enter. Oh, I think I have made some mistake. Sales divided by fixed assets. Copy, paste. I would want to see it in increasing trend. See, what does this 5.80 tells me? That for every 1 rupee invested in the business, I am able to generate 6 rupees ka sales. So their fixed assets were around here. Their fixed assets were around 4 crores, 5 crores, and you can see their sales were around 20-30 crores. So by putting 5 rupees, they are generating 30 crore ka sale. That is, by putting 1 rupee, they are generating almost 6 crore rupees ka sales. And till here, till 2017, like till 2016, their fixed assets were slowly reducing because of depreciation, and their sales was increasing slowly, but not at a very rapid pace, right? Sales have even not doubled in these 6-7 years. But once they started doing capex, once they started purchasing new fixed assets, then you can see their sales skyrocketed. So that's a healthy sign for me that my company is able to generate maximum possible amount by investing 1 rupee in the business. So you can see here, it increased for a couple of years, then it started going down. Then again, like when this capital expenditure was done, so they've purchased plant worth rupees 18 crores. They cannot expand their sales in 1 year. It will take them couple of years. So 3 to 4 to 7. This is pretty good, right? Their sales is continuously increasing because they've invested in fixed assets. From this point of time, I see that there is some consistency in them, and that's good. They are also consistent here. Then they did a major capex here, capital expenditure, that is they purchased lots of fixed assets. Therefore it went down and again started to increase. That's a healthy sign for me. Okay. Then working capital, the lube of the business. So formula for working capital is debtors, like current assets minus current liabilities, to simply put it. So I'll say current assets, that is my inventory plus your trade receivables plus your loans and advances plus these other asset item. I'm not considering cash here. Okay, this is your total of current assets minus current liabilities. that is your trade payables, then your advances from customers, and then other liabilities. Okay, enter. So working capital should be in sync with sales. If their sales is increasing, they need to purchase more raw material, and people will also be purchasing more from them on credit. They need more inventory to cope up with the sales. So it should be in line with the sales. Okay, you can calculate here a ratio called as net working capital by sales. That will show you how much percentage of sales is captured by working capital. So it should be consistent enough, right? It should not be very fluctuating. So working capital, this one, net working capital by sales. Let me convert this into percentages. Okay, this means that working capital investment is around 14% of the sales. Let's copy and paste this. I want this to be very consistent. See, there was like working capital is around on an average 20-25% of the sales. In some years, if it increased drastically when there was decline in sales, but the working capital, there was lots of unsold inventory, lots of people from whom I have to collect money. So it didn't decrease drastically, but then it have been pretty consistent around 20-25% in last 2 to 3 years, right? And it is decreasing slowly, and that's a good or positive sign for me. That is, my money is not getting blocked in working capital. Lots of people are not purchasing from me on credit. I'm not purchasing my raw material from people on credit, and I have sufficient inventory, right? Okay. Then debtor days. This means the people to whom I am selling goods on credit and how many times they are paying me. So the formula is pretty straightforward. In a year you have 365 days. So 365 divided by sales divided by average debtors. Debtors in this case is written as trade payable. So last year, comma, this year. Okay. Enter. Let me convert this. Okay. So debtor days, that is, people are paying us in 12 days. It should ideally be consistent or should be decreasing. What's the meaning of this being increasing? That means to increase my sales, I am selling people on credit. And in this environment, it's very difficult to say that whether you will be getting your money on time or not, right? So it should ideally be decreasing or it should be very consistent. So last 2 to 3 years, it looks pretty okay to me, 20 to 23 days. And you can see here, it was slowly increasing. That's a sign of danger for me. But then again, it started to decrease. Then 17 May, there was a sudden bump and then it normalizes around 25 days. That means the people to whom I am selling my goods are paying me money approximately in 20-25 days. That is 3 to 4 weeks. That's okay. Okay, next is inventory days. That is for how much period I am holding my inventory. How much days it takes to me to get my raw material, convert it into finished goods and then sell it. So how much days it is taking. So the formula is pretty straightforward. 365 divided by average cost of goods sold. Since we don't have cost of goods sold here, we will be using sales, divided by average inventory, that is this, and last year. Okay, bracket close, enter, copy, paste. Okay, so what does this tell me? This tells me I am having like I'm having inventory to match my next 75 days ka sales. It's too much of an inventory, right? If you are a very good company, as soon as you purchase or as soon as you make some finished goods, it should be sold very immediately. So it should be in a decreasing trend, but it should not be very extremely low, right? It should be in a decreasing trend, but it should not be very extremely low. So you can see here, it was increasing. That was alarming for me. Why the company is why the company is taking so much of inventory? That means it's not able to sell it, right? Its sales was not growing very fast, but it was like producing machine inventory at very fast pace rate. So ultimately, if it is not able to sell it, they'll be suffering from obsolete stock. So it was increasing. That was very alarming. Then it came down, then it came down, then it came down, then it came down, then it came down. So it is in decreasing trend from last 4-5 years, and you can see consistently they have been able to reduce inventory days at a very nominal low pace. That's healthy. Okay. Then creditor days means in how many days I am paying the person from whom I have purchased my raw material. So the formula is pretty straightforward. Equals to 365 divided by, I should actually be using purchases here, but since we don't have it here, I'll be saying equals to sales divided by average trade payables for this year and last year average. Enter. Okay. Copy, paste. Okay. That shows me I am paying my creditors in a matter of 2 days, 3 days, 5 days. It should ideally be increasing slowly and slowly. That is, I should be in a position to tell my creditor, if you're doing business with me, you have to do it on my terms. I'll be paying you in 2 weeks, 3 weeks, 10 weeks down the line. And my inventory days and debtor days should be decreasing because I want my money to be realized quickly from other people. So if I'm purchasing on credit, I should be paying them at a later stage, maybe 2 months, 3 months down the line. And if someone is purchasing from me, he should be paying me very immediately, maybe cash payments or maybe in a week or 2 weeks. That would be the best situation, but I think the company is not able to do that. Like this is something okayish for me, since it has been like very constant throughout last 10 years, but I would want the company to be in such position that it's able to negotiate the credit terms. If someone wants to do business with this company, they should be like allowing a longer period credit. That's not happening with the company. And the last thing, debt to total capital. So we discussed this in the business cycle. To start the business, you need some capital, and then ultimately that business will generate profits, and that will be used to pay off your debt holders and your equity holders. So if a business is having lots of debt, majority of the profits that it is earning will be paid to debt holders in the form of interest. Nothing will be left for you as an equity holder, right? And if this increases beyond a particular level, and for 1 quarter, if the company is not able to do that good, then what will happen? You will have to go for bankruptcy because you don't have any money and you have to pay some person. That person will drag you to the court and will file for bankruptcy. You don't want that to be happening to your companies. So always invest in those companies that are debt free, or at the most, this is my typical defined line, at the most 15% of debt in their capital. It's not written anywhere, but to my personal experience, 10, 12, 15% tak it's okay, but beyond 15, 18%, I think it becomes very dangerous. So equals to debt to total capital. So debt is your borrowings divided by total capital. That is your equity plus debt combined. So I'll say sum of share capital, reserves, borrowings, these things, bracket close, enter. Okay. So you can see this should be 0 or this should be in a decreasing trend. So earlier when they started in 2010, almost like 1/2 of the capital was borrowed. Then let's see what happened later years. Then it was very consistent till here, and then you can see they have paid off all the debt. As an investor, what a sigh of relief for me. Like my company, imagine you don't have to pay any loan to anyone. You don't have to pay back any money to anyone. How relieved you could be. You don't have any external liabilities. You can utilize your funds for the purpose of growth. So you can see company have paid out all its debt, and that's a fairly good sign for me. How it was able to do that? Because it was able to like generate very quick sales. In this 2018, they was able to generate very higher amount of sales, and their profits also increased. So you can see from 3 crores, their profit increased to 15 crores and 28 crores. And their total debt was hardly around 24-18 crores. So whatever they have earned in 2 to 3 years, they accumulated it, they paid it off, and then now they are a debt-free company. What a sigh of relief. Okay, this was balance sheet analysis, this entire thing, right? So I am pretty positive about the balance sheet analysis of this company. Few ratios are not in its favor, but slowly and slowly it's trying to improve on some grounds. It's a sign of healthy and improving company. Then what about this cash flow analysis? So let's get our data here. Cash flow from operations. Here, cash flow from operations, then cash flow from investing, and cash flow from financing. Okay. So I always want my cash flow from operations to be increasing. See, cash flow from operation means whatever, like the core business activity that you are doing. Like in this case, Kachi Karpuram is a manufacturer of like camphor and allied products. So using that, they are able to generate cash, and you can see a good consistency here. Like if I compare this, let me insert one more row and let me get my net profits here. Your net profits and cash flow from operations, if they are in sync, that's the best you can ask for, because whatever profits you are earning, that means those are cash profits, right? That means you can realize that profits very immediately. So you can see here, most of the profits earned by the company is in cash. Out of this 26 crore, 30 crore is the cash. Out of 28 crores, 26 crore is the cash. Out of 15 crore, 3 crore is the cash. So slowly and slowly they are able to realize their profits in cash. See, profit is an accounting number. You can manipulate it very easily. If you go to a chartered accountant and like if he wants to manipulate balance sheet, profit and loss account, it's not a very big deal for him. It's not a very big deal. This could be done very easily, right? But this cash flow statement is very difficult to manipulate. Though this can also be done, but it's relatively difficult. So this shows me a good consistency, like whatever profits I'm earning, it is in the form of cash, more or less, and is improving slowly and slowly. So that's a good sign. And these profits from cash or cash flow from operation should always be positive. That is, I'm earning. If this is negative, that means I'm doing the business and at the end of the month, I don't have anything left for me. So that's not a healthy sign at all. Let's talk about this cash flow from investing activities. They should always be negative. Always be negative. So understand this. This means negative means I'm continuously investing in my business in the form of fixed assets. That is, I'm increasing my fixed asset capacity. That will be helping me to generate more sales in future, then more profits in future. Then more profits will lead to more cash availability. More cash availability will lead to more fixed asset purchases. That's a loop that is created, right? So I want my fixed assets to be increasing. I don't want them to be increasing in a sudden way, but slowly and slowly, gradually, I want my investing activities always be negative. Suppose my investing activities are positive. That means I am realizing cash from my fixed assets. That means I am selling my fixed assets. I can do it once, twice, thrice. But maybe after 2, 3, 4 years, I won't be having any fixed asset. Then what will I produce? How will I produce? And how will I sell? If no sales, no profit, business is completely wrapped up. So you want these investing activities always to be negative. Operating activities positive, investing activities negative. Financing activities also negative. See, these financing activities tells us that we are able to repay our dividend and our debt on time. Like company in 2019 paid all of its debt, paid all of its borrowings here. So you can see it is negative 20 for 2019. That means the company is able to earn profits from here, invest some of the profits in your business in the form of fixed assets, and whatever surplus is left, it's paying back its loan. That's a very, very positive sign for me. It is in line with your corporate finance principles. That's great. That's great. Then one more metrics that I use is cumulative cash flows. This is cumulative cash flows from operations and cumulative net profit. So this will be cash flow from operations this year plus whatever I have earned till now. Enter. I'll copy this and I'll paste it. Okay. I'll do the same exercise with net profits. So net profits that I have earned this year plus my net profits of last year till now. Copy, paste. So total profits realized till now are 79 crore, and out of that 69 crore rupees have been realized, right? So only 10 crore rupees is non-cash profits. So you can see maybe till here
condition was 10 crores, 10 crores. Then my profits increased drastically, but my I have not received any cash flow for it. But now that is changing, and like in last 2 years, I think it have balanced out pretty well. So this is my cash flow analysis, this complete thing. Okay, two more ratios that I prefer to calculate always is return on capital employed and return on equity. So return on capital employed basically means how much return the business is generating for all the providers of capital on aggregate basis. So you can do here, return on capital employed will be your operating profit, that is your EBITDA, minus your depreciation. So that will be earning before interest and tax, divided by, or maybe let's do it post tax. So 1 minus rate of tax. This is post tax earnings, right, from operations, divided by total capital invested in the business, that is share capital, reserves, and borrowings. Okay, so it comes around 14%. Let me copy this and paste it. It should always be more than 20%, and it should be in a growing trend or a stable trend. I can see here it was 14%, 10%, 5%, then again increased. So very unstable and revolving around 10 to 15%. Then I think from here onwards it started to increase. But since I think 2018, because they have paid majority of the debt, whatever profits are left are for equity holders. So it's pretty good for 2018, 2019, and 2020. Though this is bit concerning, it's bit unstable, right? 26%, 45%, 29%. But I think as and when company matures, from small cap it moves towards mid cap and large cap, this will stabilize over the period. So this is also pretty positive for me. Then return on equity, that is how much equity holders are generating, not the all the providers of capital, but just equity holders. So that will be net profit divided by equity invested in the business, that is your share capital and retained earnings. Okay, you don't need to do this after tax because your net profits are already after tax. Okay, so you can see here it's pretty good from last 2 to 3 years. Before that it was a bit like fluctuating, 25% to 0%, then 43%. But I think company is becoming more stable in last 2 to 3 years. So that was it for my financial analysis video. I hope you learned something new. The most important thing is still the consistency. Consistently, if the company is growing, it should be growing consistently. If it is reducing its debt, it should be doing consistently. If profits are growing, it should be growing consistently. So everything should be very consistent, predictable in a company that you think would be doing very good going ahead in the future. So that's it for this video. If in case you have any doubts, feel free to reach us at thewallstreetschool.com or in the comment section below. I hope this video added some value to your time. Thank you. Bye-bye.
So now that we have already uploaded all our data into Power BI, now we can start our analytics, and we can start from the P&L as well. But you know, P&L will bring in a lot of different values like sales and cost of sales and operating expenses and depreciation and amortization and interest and tax. So I don't want to bring in so many values all together to start with, so that we can only focus on one thing at a time, and we can focus on understanding the Power BI. I'm only bringing in the sales value from P&L. And for that, what I need to do is that I need to go back to my dashboard here with the report panel here. And in this report panel, the first thing that I need to do is to pick up the right visualization. So from this visualization panel here, let us pick a visualization which can represent the number of sales. So I don't need a chart right now. I don't need a bar chart or a line chart or a pie chart. I need to present the values. And for that, the best option right now that we should be using is matrix. Don't worry that which option is best. As we move forward in this course and we use all these different options, you will learn that which option is best to when. So right now, just have a trust in me and follow use this matrix. So I will click on the matrix option, and once I do that, you will notice that Power BI has added a matrix option here on my dashboard. And you will also notice that now in this visualization panel here at the bottom, you have these options that have been added, the option of rows and columns and values. So basically these options are there for this particular matrix. So if I just click out anywhere out of this matrix, you will notice that those options have disappeared. So those options were appearing for this particular matrix. Now what I need to do is I need to bring in the value of sales, right? So first of all, let us talk about where the values are, where the values are located. So in my data, I have 4 tables: calendar, chart of accounts, GL, and territory. The values were available in the GL. So I have to go to GL and bring in my values. So first let us do that. I'll have to go to GL and bring in the amount here in the values column. Just drag it down there. And now you can see that your Power BI has populated the value of 24.6 million into the matrix. But the next thing that we need to note is this is the value of everything that was included in our data, because so far we haven't told this matrix that we only need the value of sales. We need to tell that now. So before I do that, let me go back to my data and let me see my chart of accounts, that at which level in my data the sales was available. So I hope you can see my data here. I'm sorry, things are very small, but we have to work with this very complicated dashboard. So let us focus on this one and let me scroll down. These are the balance sheet items, so I need to find the sales. Let me scroll down, and now you can see that we have sales available here at this level. So at the report level, we can only distinguish in the data between the balance sheet and profit and loss. At the class level, we can distinguish between the data with owner's assets, owner's equity, and liabilities, trading account, operating account. So we still cannot tell Power BI that where the sales are available. But in the subclass, you can see that my data is classified at sales level as well. So I will stick here and I will say to my Power BI that I need to see my data by subclass, because that is where we can find the sales. Now you must be thinking, why not subclass 2 or account or subaccount? Well, if you look at these values here, let us focus on sub account. In the sub account, if I will tell my Power BI to use the sales value here, the sales return will be missed, because these two are different parameters at sub account level. But if you go back and look at the subclass, your sales return is also merged into sales. So we can say that if we have to pick the net sales, I mean the sales minus sales return, we should be using the subclass level where the sales will be meaning sales as well as sales return. Now, if you are thinking that you are using subclass 2 as well for the same on the same basis, you are absolutely right. You can use subclass 2 or subclass, and both of them will mean the same to Power BI. Okay, so I will go back and first of all I will tell my Power BI that please classify the values by subclass that you have brought me. Now classify them by subclass. So I will go back to my dashboard and I will say go to chart of accounts and bring in the subclass into the rows. So subclass into the rows. And now you can see that all my values are appearing here as per the subclass. So we have the assets, we have the cost of sales, depreciation, dividend, but we are focused right now on the sales. So I will say that we have the sales value of 17.108 million. Now you can see that all my values are now broken down by subclass. So we can simply use any level to break down the values by that level. So one more thing, we only needed to see the sales. We do not wanted to see all of these values, right? We only needed to see the sales. So what I need to tell Power BI is to filter this report only to represent the sales. And for filter, I will be using this filter option here. And on this filter option, let us first take a moment to understand this filter option. You can use the filters on this particular visual that is selected right now. You can use the filter on this page, which means that all the visuals that are going to appear on this page, all will be filtered by that particular parameter that we have given. And you can also use the filter on all the pages. So we can add multiple pages here. If you look at this, at the bottom, we can add multiple pages in our Power BI. And if you add any filter at this level, filter on all pages, if you add any filter at this level, all the pages that are going to come into your report will be filtered by that parameter. So for this moment, I am only going to filter this particular visual, and I would say on this visual, please filter this visual by subclass, and on this subclass, please drag it down and find sales. On the subclass, only present sales. And now you can see my visual is only filtered to represent the sales value. Okay, so before I move forward, let us do one more thing. Now in my data, I had the data of 3 years, 2018, 19 and 20. And Power BI right now has compiled all those values into one column. So what I really want is that I want to break down my value of sales into these 3 years. And we can do that by using the column option here. So I will go back to my calendar. I will click on this arrow to expand this table. And now you can simply drag down the year here. And you will notice that your data is now broken down into the years. If I can zoom in, you can see that your data is now broken down into the years. And the other way you can do that is you can, exclude this year here. Don't bring it from here. Simply drag this date here, and Excel will automatically create this hierarchy for you. That hierarchy is year and followed by quarter and by month and by day. So there will be a hierarchy of different values. How this hierarchy is going to be useful, I'm going to explain that to you in a minute. But before we do that, let us do some formatting with this data so that we can better able to see these values. These are just too small right now, so we are having difficult time to look at the values. And secondly, we do not really want to see these subtotals in this matrix. So let us first fix that formatting in the next chapter, in the next lecture, and then we can move forward and proceed to other work. Alright, so I have just opened a brand new Power BI file, and my target now, first of all, my target now is to fetch all that data, bring all that data that I was just having in Excel into Power BI. And you can do that right here, but let us close this pop-up panel here, and we can simply download our data from this toolbar here. So you can see that in this get data, we have multiple options. We can do that from Excel, from Power BI datasets, or data. These are, these data words in SQL Server. These are different type of databases. So our eventual target when we are working in any company should be to connect our database to Power BI so that we can always get our latest data from our database. But at this moment, I will keep it simple, and I will just get my data from my Excel file. And for that, I will just click here on this Excel workbook here. And now I need to tell Power BI that which file is the one which contains my data. So I will click on this one here, the one which says data, and I will click OK. And it will just take a moment, and just give it a second. And now you can see that I have all that information available in this sheet here. So my table, my Excel file contained a sheet for GL, that is year. It also contained a sheet for territory. It also contained a sheet for calendar, and there was another one for chart of accounts. So you will notice that we have all of this information duplicated. So we have information in this without writing TBL and in this different icon. And then we also have this information available here with this different icon and with the word TBL. So basically in Excel, you can simply store your data in a sheet, or you can create a table around that. So we have created a table, and that should actually be done. So if you know the table, you will understand that. But if you do not understand that, please skip that step and simply move on with my file at this moment. So I will click on TBL calendar. That is something I want to bring. Next, I will click on TBL chart of accounts, next TBL GL, and next TBL territory. Now we are skipping two tables here. The first one is TBL CF and TBL SOCE. So this is basically cash flow and statement of changes in equity structure. We will bring that in later on when we need that. At this moment we do not need that, and you did not notice these two tables in Excel because I had hidden that. So we will only work with these four at this moment, and later on when we move on to prepare our cash flow statement and statement of changes in equity, we will also bring these two in. But for now, the calendar, chart of accounts, territory, and GL. And once we are done, we'll click on load. Now you can also go to transform if you need to make some modifications with your data. We will talk about that later. At this moment, my data is already neat and clean and all sorted in Excel, so we don't have to do anything. I will simply click on load, and Power BI will bring all that data into my Power BI system here. Okay, so it is loading, so please give it a moment. Alright, so all my data is now available in my Power BI, and you can notice that I have these four tables available here on my right hand. Now you will notice that we have three icons here. These three icons serve a very different purpose. This one, the first one, we will be building all our dashboards here, all our visuals and reports here. The second one here, this is the area where you can see your data. You will go there and you will see all the data, you know, that you have just uploaded. So if I just have to navigate between the sheets, I will click here, calendar, and then we have chart of accounts. You can see that data as well. I have GL, you can see that data, and you can also see the territory. So we have all that four tables that are now available in Power BI. But as we discussed in the data introduction part, that our system does not really know that these four tables are interconnected. So in the databases there must be links, but now we have extracted those data in four separate tables in Power BI or even in Excel. So our system does not know, our Power BI does not know that these four are interconnected, and we have to manually create those relationships, and that part is this third icon here, which is called data model or data modeling. So first of all, let us hide this field here, and now you will notice that we have, let me a little bit, you know, let me arrange that in a better order, and if I can just bring that one here as well. So this is now on one screen. Perfect. So now you will notice that Excel has Power BI has already established one relationship here, and that is this one. So TBL territory has been connected to GL, and if I just hover over this one, I will just, you know, zoom on this one, you will notice that it is also highlighting that which two fields are connected. Territory key has been connected with territory key, which is completely all right, and this one is also linked here automatically. The account key has been linked with account key, and that is also perfect. So one more thing, one more relationship that we need to create is to, you know, create the link with the state and the state here. So I will just click on this one, keep it clicked, and, you know, I will just drag it this one here, and now my system will establish a relationship for me. And if I just click on this one, you will notice that the date has now been connected with date. So let's repeat it again. This is a relationship between date and date. This is a relationship between account key and account key, and this is a relationship between territory key and territory key. So now this way my GL is now connected with all these three different tables, which means that if I have to analyze my GL by calendar dates or by year or by month, I can do that. If I have to analyze my GL based on different reports, I mean balance sheet or P&L or by account, I can do that as well. And if I have to classify or analyze my GL on the basis of territory, I can do that as well. So with a click of a button, I will be able to, you know, change my views of GL or all the reports that are based on GL for different countries. So, you know, this link will definitely mean that now I will be able to sort my GL just by a click of button, and it will change the data for a different country. We are going to do that later in this course in just a few moments. Okay, so that is the simple data model. But before we move forward, we always have to, you know, whenever you upload some data into Power BI, you will always have to make sure that there are some there are some quality checks that you need to do. So first thing, do you notice that there is an aggregation sign alongside this year here? So Excel will, try to, Power BI will actually aggregate the year on the basis, the symbol shows that it will try to sum this year here. So what I need to do is that I'll click here and I will go on properties, and in this properties panel here, I need to make a modification, and that modification is in the advanced part here. It says sum, summarized by sum. So I will say do not no sum. Basically I would say that none. There should not be any summarization based on this tool, and once we have done that, you will notice that this aggregation sign has been removed. So I will just hide this here, and you will also notice a similar sign here with the entry number. That was basically our entry, that was the line item in the GL. So we do not need any kind of aggregation on the basis of that as well. So I will click here again. I will go to properties and I will go to advanced here, and I will say in this advanced part the summarized by should be none. So there should not be any summarization by that as well, and you can see that this sign has also been removed. And finally, we have to make similar adjustment for the country as well. So whenever you are giving location in your table, you have to tell Power BI specifically that if it is a country or a city or a zip code, so that system can automatically understand the maps when you are drawing any. So I will go to this field here and I will click on this properties, and again in the advanced part I will go to this this data category. So I will go to this data category, and in this here you can see that we have an option of this country here. So I'll select the country, and similarly I will go to the second part, that is region. So in my case the region was basically a continent, so I will select continent for that, so that my system can draw the map accordingly. And finally this territory key, we do not need to do anything for that. So you will notice that there is a map sign here. So this basically shows you that this field is representing a location. So this is basically a standard. Whenever you bring in your data into Power BI, you will have to adjust these two things. So you will have to make sure that there is no field that is a kind of there is no aggregation on irrelevant field. So there should be aggregation on the amounts, but there should not be aggregation on the fields like line number or account key or any other key. Similarly, if you are using any locations or countries or regions, you will have to tell Power BI for that as well. And finally, let us talk about one more thing, and that is this date. So this date here should be so this date should be assigned as date in the system, and there should be a proper format that should be given for that. So for this one, you will notice that there is already a calendar icon here. So system already knows that this one is a date, but still I need to check the format. So I will click on this field and I will go to the properties, and in this properties I will go down and I will see that what is the format here. So the format is given as day and then month and date and year. So I don't want the day here. So I will just simply go there and I will select on this one, that is month, date, year, a simple short format. So this one is fine now, and I will do the similar thing for this date here as well. So I will select this field and I will go to date and I will say simply select this one as short date, and this is now done. So this all data has now been arranged properly. And by the way, one more place that where you can make these kind of arrangements in this data, well, you can do that in the model as well, this the way I have just done here, or you can simply go to this toolbar here, this panel here, and in this panel you can make all those adjustments from this top panel. So for example, if I click on country, you can see that you have this data category here, and you have this text format, and you have this field name and the data type. So similarly, if I just click on this one, this calendar here, you will notice that we have date here. If I click on this one, you can adjust the format, you can provide any kind of summarization if you need that. And similarly, if I go to the other tables here, for example GL, you will notice that you can, if I just click on amount, you will have the option to select the format and the decimals and any kind of summarization. Similarly, if I click on date, you will see that you should have the format and you should have the data type and you should have any summarization if you like. So this way you can also do that in this field here, as in this panel here as well. So I will conclude that This panel here is for modeling, where you will actually create the relationships between data. So this is basically a one-time effort. You won't be coming to this screen very frequently. Secondly, we have this panel here where you will be accessing all your tables. You will be going back to your data and you will be seeing all your original data again and again. And finally, we have this panel here, which is basically for dashboards. So all our reports, our visuals will be coming on this panel here. So I hope that you now understand the basic overview of Power BI. So let us do some formatting for our matrix. But before we start, please make sure that we have already clicked on our matrix. So if you click anywhere else on the dashboard, you will not be working on the formatting of that particular visual. I mean, in this case, on that particular matrix. So once we have clicked on that, you will notice that in the visualizations panel here at the bottom, where you will be working on this option here, the second tab is there, which is called format. So if you click on the format, you will find so many options here that includes, general to style to grid to column headers, row headers, values, subtotals, grand totals, field formatting, conditional formatting, title, background, so many options, right? So let us start one by one. And the first and the most important thing that I want to do is to get rid of these subtotals. So there is only one value, so why we need to see the subtotals, right? So I will go here in the subtotals, and in the subtotal here, I will simply turn off this row subtotal, and I will also simply turn off this column subtotal. And once you have done that, you can see that both the row level subtotals and the column level subtotals have simply disappeared. And so once you have done that, simply close this subtotal panel by clicking on this upward arrow. And once you have done that, let us move to other values. Now let us fix the font size of this data. So we have three things to address: the values itself, the row headers, and the column headers. So first of all, let us find the values. And once you find the values, you will click on this drop down and you can adjust the font color, its background, and so many different options, right? But the most important thing that we need to do right now is to increase the size of this font. So I will simply drag it down and I will, increase the size of this font from here. And now you can see that my font is way better visible, and I think 14 is the better size. So I will click on this 14 and that is it. I don't want to make any further changes in the font. So I will simply close this values panel. And once we have done that, let us move to row headers and column headers. Now let us move to row headers, which is this one, and the column headers, and let us increase their font size as well. So first of all, row headers, and let us scroll down and let me increase the font size to 15. In fact 14, not 15. And once we have done that, also let us move to the column headers and let us increase their font size as well to 14. So this is now better presentable, right? So there are different options, you can choose, you can play around these different formatting options. We will be doing that only, we will be doing the formatting only as needed, and by the end of the course you will be able to understand most of these options anyway, right? So now that my matrix is in a way better shape, I will just do one more thing, and that is to add a title. So I will just go there and turn on the title, and on this title I will click on this drop down and I will add a title here, and that should be sales revenue. Okay, so we have done that. The font style should be heading 3 or heading, let us make it heading 2. And now let us make it centrally aligned, and the font color is black, that is fine, but the background color should be in a heading style, so I will make it blue. Not this one, make it a little brighter blue, right? So we have this sales revenue here, and I don't really like this font, so I will scroll down and I will change this font to, let us say, to Calibri. And so, okay, perfect. So we have this complete formatted heading here. So I think we are done with this sales revenue. So we have the sales revenue of 2018, 19 and 20. Next, we are going to break down our sales revenue by month or by quarter as needed. So we are going to use these options here to expand our data at different levels. Let us do that in the next lecture. Right, so now let us expand our data by months and by quarter. And I don't need these panels here, so I will simply zoom into my screen so that we can see the values very clearly. And I just want these options to appear on the top, so I will just drag it down towards the, little bit towards the downwards. And now you can see these options are at the upward end. Now what we need to do is that I really want to expand this data by quarters and by months. So first of all, let me show you this option. This option says go to next level in the hierarchy. And in the hierarchy, we are talking about the date hierarchy right now. Why I'm saying that, you will just see that in a few minutes. At this moment, we only have one hierarchy, and that is, the date hierarchy. In the sales, there is no further breakdown of sales, so we are only going to talk about the year at this particular moment. So by this button, what this Power BI will do for me is that it will expand this data into the quarters. So now the data which was broken yearly is now broken quarterly, but the quarter one here means the quarter one of 2018 plus quarter one of 2019 plus quarter one of 2020. Similarly, quarter two means the quarter two of all these 3 years. And if I just expand this once again, so we have already seen that how we can analyze our sales from all that complete, complete general ledger of 3 years, how we can analyze our sales very quickly. Now the next thing that we want to do is to add a visualization so that anyone who is looking at sales can quickly understand different patterns in that. And thanks to Power BI, this is going to be very easy. So what I need to do is that simply click on this matrix and do the Control C, Control V. That is our traditional copy paste. And once you have this new matrix here, keep it selected and just go to the visualization that you want to add. So for example, I will like to add the line chart for the sales trend. So I will just click on that line chart here, and once I do that, you will notice that Power BI has automatically added the line for you. So you don't have to do anything again. Power BI will take care of that. Just click on the type of the chart. So for example, if you like to do the bar chart, just click on that and Power BI will do that for you. So going back to my line chart, now you can see the trend. And if I can just show you the values, just hover over this one and you can see the first year value is 3.575. that is the same here, and the second one is 5.697, and the third one is 7.835. So this way you have quickly converted your sales into a chart here. But what we need to do now is that we need to convert this chart into okay, so now that we can analyze our sales into different ways, what we need to do is that we need to go a bit further, and we should be able to break down our sales by country. And we are going to do next. But before I do that, let me arrange my dashboard in a bit decent manner so that we can quickly see what is happening. So let me make it a bit smaller and let me make it a bit aligned. And I don't really want to see these y-axis here. So what I'm going to do is I'm going to go to my format after selecting this icon, after selecting this axis, and I will simply turn off x-axis and I will simply turn on the y-axis. So I have the overall trend, right? But I also don't want to see this this heading of amount and date month. So I will simply click on this drop down here. I will drag it down and I will turn off this title, and now you can see the title has also disappeared. And I will just go back and I will go to y-axis now, and I will drag it down, scroll down, and I will also turn off the axis of y-axis. So now we can we can see this overall trend comparatively in a neat manner. So before I move forward, let me do one more thing, and that is let me repeat my objective. And the objective is now to be able to analyze sales by country. I just want to see one country at a time. And for that, what I will be doing is that I will be bringing a slicer here. So a slicer is basically an option given here in the visualizations. And once you click on that, you can see this option is appearing on your dashboard now. Welcome back. And now we have decent information on how to use Power BI. Now we can move to our first target, and that is the preparation of profit and loss statement. And for that, we can actually make a new dashboard here, and we can start right from scratch by clicking here, and that is a complete new dashboard, and we can start building our profit and loss. Or we can simply duplicate this previous dashboard and we can make the adjustments as needed, and that is something that I'm going to do now. So I will right click on this page here and I will click on duplicate page, and now you can see that we have duplicate of page 1. So I will call page 1 now as sales, and now the duplicate of page 1 I will rename it as P&L. Okay, so now on the P&L, I don't really want to see these charts here, so I'll click on this one and I will delete. I will click on this one and I will delete. I will keep my slicers so that I can quickly slice my P&L as well, or you can delete it here as well, and you can bring it back again whenever you need. And now I will use this matrix here. Well, you can simply start from a new matrix, but the thing is, I already have done some formatting. For example, I have changed the font size and all that. So if I start right from there, the things will be a bit faster for me, right? So you can choose any option that you like. So right now I'm going to move to with this one. So first of all, I will make sure that I remove any filter that were applied before. So I will say subclass should be sales. Please remove this one. And now you can see that your matrix is bringing in all the subclasses, right? Now the next thing I want to do is to make sure that I only see the data which is relevant to P&L, and for that we can use this filter here. But now let me take you to the data and let me show you that where we have to define this filter. So if you look at this data closely, the second column here is for report, and in this report you have an option for balance sheet. So now that we have prepared our profit and loss statement, the next thing that we would expect it to do is we would like to calculate the gross profit, the operating profit, the profit before interest and tax, and finally the net profit. And if you look closely, these values here, the subtotal in front of the trading account, already represent the gross profit. Why is that so? You know that this is the subtotal of this particular segment, that is trading account, and the subtotal of sales and cost of sales is going to be your gross profit. What I really want to do to make it simple is I want to represent this subtotal at the bottom of the group rather than at the top, and that is very simple. Just select the matrix, go to format, and then go to the subtotals, and in that subtotals there must be an option, and that option is that these subtotals should be represented at the top or at the bottom. So I will select the at the bottom option, and now you can see that your subtotal of trading account, I mean the gross profit, is represented at the bottom here, and you can see your gross profit. Similarly, you can see your net profit as well. If I can just resize this matrix here we have our, just let me do that again, and here we have our okay, so I will have to reduce the size of my font. So I will go back to this format option here, and I will go back to the values, and in that values let me reduce the font size. Now you can see that I'm unable to fit in my whole matrix here on the screen. So I will go back and I will select the size of 11 so that everything is fit in right here. And let me also reduce the size of the row headers. So let me change that and let me go to the row headers. So in that row headers we need to reduce the size here as well, and that should also be 11. And once we do that, I think yes, so everything is now perfectly fit in on our screen. So now you can see the gross profit as well and the net profit as well, but we cannot see the operating profit. You can see that the operating account subtotal that is represented here at the bottom of operating account is just the total of operating expenses. Similarly, the total of the non-operating that is represented here is just the total of these non-operating. So we do not have the value of a profit before interest and tax and net profit that is appearing here on this screen. Secondly, you may like to rename this total as. Alright, so now that we have already calculated our values of gross profit to all of these different values to net profit, I just need to show you some other options, some other visuals that we can use on our dashboard to present these values, because all the time you will not be using matrix. There are different options that are better suited for different reasons. So two options that I really need to show you here is the first option is going to be this one, the card, and the second option is going to be KPI. There's a third option that we will not be using right now, but we will use that later in this course, and that is multiple row card. So first of all, let us work with the card here. So once you have selected your card, you will notice that there is only one field that you can input here, and that field is going to be a value. So I'm going to present the amount here. So I have selected the amount, and now you will notice that this value that is being presented here right now, we haven't applied any filter context until yet, which means that this value is the total of the GL, which means all the P&L and balance sheet values and even the adjusting values have been included here. So this value is quite meaningless. So what I need to do is to apply a filter, and for that filter, first of all, let us decide what we want to present here. Let us say I want to present sales. So I will go back to my table chart of accounts, and I will see at what level I can define the sales. And you can see that I can define the sales at subclass level. So let us go back and let us say we want to apply a filter in the chart of accounts from the subclass, and in that subclass we only want to see that sales. And now you will notice that we have the correct value that we had expected to see here of 17 million. So if you sum all of these values, you will be getting your 17 million. That is the sales revenue. So before I do the formatting of this value, let me show you one more thing. Let me talk about one more thing, and that is the value that we have received here in this card is a sum of all the 3 years, 18, 19 and 20. And that is basically the standard behavior of this visual. If you want to manipulate that, if you want to present only the current year value, you can use that using the advanced text options. But for a simple basic usage, we will not be able to change this value here. So we should only be using the card option, where we need to present the value of all of these different years combined together. Well, eventually you can, have a slicer like that for the years, and you can manipulate the value using a slicer. That option is still available, but the basic standard function, we should know that as well. So one thing that I need to do before moving forward is to format this value to present all the different, all the numbers, not rounded off to the nearest decimal. So let us do that. Okay, so time to talk about our third visual, and that is going to be KPI. So let us select KPI from this visualization pane, and now you have a blank canvas here for the KPI where you can enter your values. By the way, you could simply copy and paste the previous visual and simply make the changes. You could simply select the visualization then, and your filters like sales could simply be imported from the previous visual. But never mind, we can do that right from the scratch as well. So now that we have selected this matrix, you will notice that we have three options. Now we can enter three different kind of parameters here. We have an indicator, and then we have a trend, and then we have a target goal. So with the goal, you will understand definitely that this KPI, in fact the KPI words tell the same thing, that we will be evaluating a value against a benchmark. In fact, we are not going to do that evaluation against the benchmark right now. I'm just going to show you the basic behavior of this visual, and later on in this course we will learn how to use this as a benchmark as well. So first of all, in the indicator, what I want to present is I want to present my value. Okay, so in this lecture I'm going to work with slicers, and I just need to show you a small feature here. So I will just first of all make this one smaller and put it here in the corner. And now I need to add a slicer, so I will click here on the slicer option, and once we have the slicer option here, I will enter the parameter. And for now I just want to enter the parameter of years, so I want to slice my data by years. And now you will see that I have this strange kind of thing, not exactly strange fire kind of thing. This is a kind of drag and drop option. So I will just change that right now, and I will say please make it a list. That is something that looks much easier to me. So okay, so we have this slicer decently pasted here in the corner. Now what I need to show you right now is, if I just click here in 2018, you will notice that all these visuals are now representing the value of 2018 only. That is what we have expected, right? There is no problem with this. But now if I take this to 2019, you will notice that in this all of those other visuals are correctly representing their values. But in this TTD, sales revenue TTD, someone could have expected that he will be receiving the value of 2018 as well as 2019. So this is where we should keep in mind that even though the standard behavior of the card is that this represents the value of total to date, with the slicer this will only be bringing the current period, the current specific period value. Similarly, if I go to 2020, you will notice that it is again only presenting the value of that specific period only. Now, one thing that you could do is that you can select the 2 years together as well. So press the control key on your. Okay, so done with the value based visualizations. Now I want to bring in some other beautiful visualizations like charts and graphs to bring in some more analytics and visual aspect in my dashboard. But before I do that, first of all, let me go back here and let me remove this filter on this slicer on the years. And once I have done that, let me bring it a little closer, these values a little closer, so that I can actually fit in more visualizations on the same dashboard. So for that, let me first of all copy all of them and let me bring that here at the bottom. I'm sorry, not this one. Let me bring that here at the bottom of the page. Let me get it here in the corner and let me get them a little closer so that I can bring those values from the other column in the same pane. Okay, so once I have done that, let me fit in the sales here as well. And now one more thing is remaining, and that is to fit in that last value of sales as well, that is sales TTD. I really want to fit that as well in the same line. So let me, because I want to have more dashboards, more charts I mean. So let me bring that in closer, and once I have done that, I can now try to fix it here. Let me see if it works. Okay, so it is kind of working. So fine, good for me for now. Okay, so let me bring this one. Okay, so all right, it is acceptable. So okay, so our dashboard is actually very nice to analyze the overall picture of the company or analyze any specific country, one specific country at a time. And you can see all my charts and graphs and visuals are responding to my slicer option here. So we can analyze any country, at any time. But you may like to see the country comparison, and I don't want to bring in those comparison, cross-country comparison in this dashboard, because that is going to create a lot of mess on this dashboard and my dashboard will become meaningless. So I will make a separate dashboard for that, and let's do that right now. So I will click on this plus sign here, and by the way, before I do that, this page 2, do you notice that we haven't done anything on this until now? So delete this one and let us delete. And now let me add a page here, and in this page I can rename this as cross country. Okay, so what I need to do first is I need to copy these charts from here to this new dashboard so that I don't have to work all of these things again from scratch. So I will copy, simply select them. You can select multiple visuals by pressing the control key. Once you have done that, press the control C. And now on this dashboard, please press Ctrl V and you have all your visuals. And before I start bringing in the cross-country comparison, let me bring in this multiple line legend, because there will be separate lines for the country as well, and then we have separate line for the year as well. That is going to create a lot of mess. So I'm going to remove the legend from here, and in this axis now, even though it seems all good, we do not have the option. So we have prepared two beautiful and very meaningful dashboards until now, and we haven't used any DEX formula at all or any other formula at all. But you will agree with me that to do meaningful financial analysis, we have to calculate ratios like gross profit margin and net profit margin, return on capital employed, ROI, that is return on investment, and many other ratios. And that is only possible with DAX. So in the next section, we are moving towards our next step, and that is learning DAX to do more advanced financial analysis. So welcome to a very exciting part of your learning, and that is DAX. So DAX is basically data analysis expressions. So this is basically a formula language that is used in Microsoft Power BI, and even in Excel. If you are using Power Pivot, this is the same language that is used there as well. So learning DAX will not only make you proficient in Power BI, but also in Microsoft Excel. Now, what is actually DAX and why we need to use that anyway? Let me explain you. So you will notice that while we were working on calculating our P&L, we have simply dragged down our value of amount from here in our GL to this value column here, and Excel actually in Power BI actually gave us the right values in this matrix. But that was the standard behavior that was coded by Microsoft into this function of matrix. But what if I did not need this for the period value? What I mean is, what if I was working to prepare balance sheet? Now you will agree with me that balance sheet values are not for the period, but these values are balance sheet values are total value to date. Now let me explain you. When we are calculating sales for 2018, that will only be the value for 2018, and in the 2019 the value of sales is start from 0, and then we only merge this transaction of 2019. And similarly in 2020 we will only calculate the value of 2020, and 2018 and 19 will be excluded. Now this is the standard behavior that has been coded into this matrix function. Okay, so to write DAX, I mean to create a formula, the first thing that we need to do is to understand the interface. And this interface is to create a new DAX measure, a new DAX formula. This is called measure here in Power BI and Excel, but in both of them. So to create a measure, you will go to the modeling tab and you will click here on this new measure. There are other places as well where you can do that, but let us start from this one, modeling tab, and then here we have the option of new measure. So let us click here and it should open the new interface for you, a small window in the same dashboard, and here it is. So the first thing that we need to do is to define a name for our measure, and that should be the kind of function that you are creating. So the function that I am going to create right now is basically the total of the value. So I'm going to say please create the value of a total underscore FTP. So FTP is basically for the period. So I want this measure to do is to calculate a value that should be specifically for that specific period. Kind of 2019 should only bring the value of 2019. And this is going to be very simple. Just write the formula, and that formula is going to be sum. So once you click on sum, this option should appear, and just press the tab key on your keyboard. And now you will notice that Excel is giving you, Power BI is giving you this kind of open drop down. So now we need to learn how to calculate gross profit using DAX. And first of all, let me change the screen and let me move to the data screen here. I will need that to show you something. And now in the table tools, you will find the option to click on new measure. And once you do that, you will see that the option to calculate the measure is here. Here you can write your formula. Let me zoom in for you. And here we have the option. Okay, so first of all, let us give the measure name, and that is going to be gross profit. So I'm going to say gross profit equals, now we need to use a function here, right? So we could simply use the sum function, but the problem with sum function is it will be summing up all the values that are available in the amount column. So what we need to do is that we need to somehow tell Power BI that please use the sum function, but apply a filter, and that filter should be that only those values should be considered that are included in the calculation of gross profit. So we should be talking about sales and cost of sales only when we are doing the calculation of gross profit. So, and that function, the function that gives us the. Okay, so now it's time to move to the calculation of EBITDA or operating profit and PBIT and net profit. So you can move to any of them, but I think the net profit is going to be the easiest one. And we have since just started learning DAX, I will move to the easiest one right now, that is net profit, and then we will move to the calculation of other these values as well. Okay, so for the net profit, let me again go back to my data, and let me first of all show you that what I want to do. So I want my Power BI to do the sum, right, of all the values, but where where the report is profit and loss. So if the report is profit and loss, all of these values are going to be automatically considered, right, from sales to the taxation. So all the income and expenses will be covered, and the value that is going to come up is the net profit. So that is going to be very simple, and let us do that right now. So I'm going to table tools and click on new measure, and in that new measure I'm going to say, let me please fix this, and I'm going to say net profit equals to okay, so first of all we have to apply the calculate function so that we can filter our values, and that is going to be calculate. And then now we have to either calculate the sum altogether, or we can use a previous function, and the previous function that we already had was sum, so total. Alright, so it's now time that we calculate operating profit, and this is going to be a little more complicated in DAX than before. So let us first of all understand the data, and let us talk about what we are trying to do. So let us take a look at our P&L, and to reach at the operating profit, what we got to do is we got to tell Power BI that please calculate the sum of all the values, but only where the class is trading account or operating account. Now I cannot say and, the reason being that if I will say and, there is no such value in this in this complete sheet where there is trading account and operating account, right? So it has to be a trading account or operating account. If any of the condition meets, the value should be included in the sum. So let us do that. So let me zoom out and let me go to my new measure pane, and in this new measure let me zoom in for you. If you have to increase the size of this measure block and font, just press the control key and the cursor on your keyboard, the wheel on your keyboard, and now we are going to name it as operating profit. Okay, so this is going to be calculate, and then use the previously calculated function of sum, that is FTP, and that was total FTP. So we already have calculated our operating profit, and this is completely fine, but I also need to teach you another way to calculate operating profit using DAX, and that is basically going to be our traditional way, and that traditional way is gross profit minus all the operating expenses. That is going to be operating profit, right? So let us do that in the DAX, that how do we do it. But before that, let me take a look at data again, and let me show you what we are trying to achieve. Okay, so if we can scroll down in the P&L, that we already have the sum of the trading account, and that has been defined as gross profit in the data. We already have a measure that has been defined as gross profit. If we simply take the operating account expenses, operating account total from, and we simply deduct that from the gross profit, we will be reaching at our operating profit. And this is what we are going to do now. So I repeat, we will take the gross profit and we will deduct the total of this operating account right from here to here, and that is going to be our operating profit. So let us do that in the DAX, and for that I will say please define a new measure. And in this new measure, give it a second please. Okay, so here we start now. So I'm going to name this as operating profit 2 just because we already have the operating profit, so I will name it as operating profit 2. I will delete it later on. And this is going to be, first of all, let us simply refer to the previous calculation that we already have, and that is going to be gross profit. Simply write gross profit and it will give you the measure. This calculator icon on the left of gross profit is showing you that this is a measure. And now we need to deduct, right? But rather than deducting, I will use the plus sign, and the reason is the expenses are already in negative, so negative will become a positive. So since these expenses are going to be already negative, I'm using the plus sign. It will automatically be handled, right? So now I'm going to plus, and what I'm going. So I really hope that you have already calculated EBITDA and PBIT but if you like to see that again, let me do that for you. So first of all, let us calculate ibtida, and for ibtida all you need to do is that you need to pick up your gross profit and you need to deduct your operating expenses. But please make sure we are talking about operating expenses and we are not talking about operating account, because if we talk about operating account, it will include everything right to this point, right? And we are only talking, we only need the expenses before depreciation and amortization. So let me take you to the chart of accounts and let me show that here as well. So we already have the gross profit, that is trading part, and we cannot work on the class level because that eventually this parameter will eventually go directly after depreciation and amortization. So I will actually work on subclass, and I will say gross profit minus operating expenses, and that value here should be ibtida. Okay, so let us start with the new measure, and this new measure is going to be named as ibtida. Okay, so here we go, and EBITDA equals, first of all let us begin with the gross profit because we already have that calculation in measure, and now we will say that please calculate. Okay, so let us quickly calculate our PBIT, and for that, you know, we already have our operating profit and we are standing here, and all we need to do is to deduct these non-operating expenses or add back this income. So I will use the plus sign, in which case, you know, if that is an income, that will automatically be added. If that is an expenses, you know, that will automatically be deducted. So let us do that, and for that let me quickly show you here on my chart of accounts, and let me take you to my chart of accounts here. And here you can see, if I can scroll down, you will see that if I already have operating profit, that means I'm standing here after depreciation and amortization. Now I need to do the add back of non-operating, and that should be done at the class level. Okay, so let us add a new measure here, and I'm going to name it as PBIT. So give it a second, and right, so here we start. PBIT equals, first of all we should have operating profit. Now we already have two calculations for that. You can use any one of them, so I will stick with the first one for now, and then we are going to do the plus, because I already have discussed that if there are expenses, that will automatically be, because they are already in negative, that will automatically. Okay, so let us start working with the measures that we have created, and let us create some of the charts. So first of all, I'm going to duplicate this P&L page here because I don't want to spoil my original work. So I'll click on this duplicate page, and here we have duplicate of P&L. And now from this duplicate of P&L, I want to delete these gross profit and net profit charts because I will bring in more, you know, effective visuals using the data I have. Okay, so the sales revenue line, let me fix that. Let me bring that in here. Let me make it a little bigger for a moment. And okay, so from this, you know, we already have the total FTP that we put in here, but with that there was a filter of subclass sales. So I will remove that filter of subclass sales, which means that this visual is no more representing sales. So let me close that. And now the problem with this total FTP is this is only bringing in the total value for that period. This is not specifying that we are talking about sales or cost of sales or gross profit or whatever. So I need to get rid of this total FTP, and now let us only bring in the measures that we need. So I'm bringing in the gross profit, and I am bringing in the net profit as well in the same chart, and then I want to bring in the sales as well. But the problem is we do not have a measure for sales at this moment, but never mind, you know, we can create any measure very quickly. So I will just go to this chart here, and I will say let us open the chart of accounts and see the level. So the sales was defined at the subclass level, right? So let me quickly create a. So in this revenue chart that we were just working on, if you like to see the different countries, you know, different parameters, I'm talking about country, for example, differently, you can do that very quickly. And all you have to do is that you need to simply drag the country from here from the territory to this small multiples. And once you do that, you will see that your chart has now been broken down into different countries, and let me take that to the focus mode, and you will see that here we have now different countries that we can see. So we can quickly see that where the problems are and where the profit margins are falling not proportionately. So for example, this country here, for this one as Australia, this is the gross profit is still positive, but you know, we are in the losses now. And similarly, we can find some other good trends. For example, in this one in the UK, you can see that even though the sales revenue has fallen very closely to gross profit, so you can actually see that your gross profit has not fallen in that proportionate way. The sales has fallen more. So the possible reason may be the increase in prices, which is causing the fall in the revenue, but the gross profit is still able to sustain. We are still able to sustain the gross profit because possibly the additional increased pricing are bringing those additional gross profits. So this way you can actually analyze your data, but that was just additional possibility within this chart. So let me exclude this country for now, and we are back to original chart, and let us move to some other charts. Okay, so now we want to define a new creative visual which is going to represent the relationship between sales revenue and the marketing cost, because it is a very common perception that we can actually increase the sales revenue by spending the money on marketing. So let us define that relationship here on our dashboard. And for that, I need a visual, so we can simply copy paste the previous one, or we can pick up a new one. So I will pick up a new one here, and let me resize that first. And now the first thing that I need to define here is the sales revenue. So I will bring in sales into the value section, and then I need to bring in the date into the axis. And now that we have a basic chart, the next thing that we need to bring in is the marketing cost. And now the marketing cost has not been, we don't have any measure for marketing cost till now. And, we cannot simply bring in this amount here, because that will bring in all the amount for everything. And we cannot apply the filter here because this chart has multiple things. Okay, so what we need to do is to define a new measure. And for that, first of all, let us look at our data, and let us go to our chart of accounts. Now in that chart of accounts, let us scroll down and see where the marketing cost is. So you can see that the marketing cost is defined at subclass level 2 here. If I can zoom in for you, you can see better. So at the account level and sub account level, the marketing cost is broken down. So the easiest way to pick up the full marketing cost is to work at subclass level 2 and pick it up as marketing. So let me go to define a new measure, and I would say new measure. And in that new measure, I would say that please bring in a new measure as this is going to be market. Okay, so going back to the calculation of values, let us calculate two very much required values, and these are going to be gross profit margin and net profit margin. So let us begin with start with a new measure. And since we already have the measure for gross profit and we already have measure for sales, we will not need to go back to data and see at what level we need to work. We just need to use our measures to create a new measure. So simply click on modeling tab here and click on new measure. And in that new measure, what we are going to do is we are going to name it as GP margin, and this is going to be equals to gross profit. And now select this value of gross profit, that is a measure, divided by sales FTP, and you can do the multiply by 100, or you can simply fix that from this format. So I'm going to use this option, and I'm going to say please pick it up as a percentage option. And then since it is a percentage, I will prefer to have 2 decimal, and I would like to have this placed in GL. So everything is fine except the spelling, so let me fix that. So GP margin. Okay, so everything is done, so I'll simply press enter, and this should now be added. Let me remove this here, and okay, so this is added. Let me quickly add the net profit margin as well. So I will say new measure, and I will say this is going to be NP margin equals Net profit, that is a measure already, divided by sales FTP, that is a measure already, and the format should be fixed to a percentage. Not this one. Let me go to the percentage. 2 decimals should be applied, and it should be in the GL. That is all fine. Okay, so everything is done, and we already have this measure now. Now the next point is, where do we want to present? How do we